Investing in the stock market can be a daunting task, especially if you're new to it. With so many companies and industries to choose from, how do you know which stocks are right for you? The good news is that with some research and careful consideration, choosing the right stocks to invest in doesn't have to be overwhelming. In this clip, we'll guide you through the process of selecting the perfect stocks for your investment portfolio. Whether you're a seasoned investor or just starting out, these tips will help ensure that your investments pay off in the long run. Do your research. Before investing in any stock, it's essential to do your research. This means taking the time to learn about the company and its industry. Start by reading news articles and press releases about the company you are interested in. Look for information on their financial performance, including revenue growth, profitability, and debt levels. You should also take a closer look at the competition within their industry. Identify other companies that operate within that same sector and compare them with each other. You'll want to pay attention to market trends as well. What external factors could influence this particular industry? Another important step is reviewing a company's financial statements, such as annual reports or quarterly earnings reports. These documents can provide valuable insights into how the business has been performing over time. Furthermore, it would be best if you researched leadership positions of your chosen businesses like CEO and CFO, because they play pivotal roles in steering their respective organizations towards profitable grounds. Don't forget to check out online forums where people discuss stocks. These can give you an idea of what others think about specific companies or industries. Consider your risk tolerance. When it comes to investing in the stock market, understanding your personal risk tolerance level is crucial. Your risk tolerance refers to how much volatility and potential loss you are willing to accept when investing. Before making any investment decisions, take the time to assess your current financial situation and determine what level of risk is appropriate for you. This can depend on various factors such as age, income, savings goals, and overall financial stability. If you have a low risk tolerance, consider investing in more stable stocks such as blue-chip companies with a history of steady growth. On the other hand, if you have a higher risk tolerance and are comfortable with potential fluctuations in value, you may want to consider more aggressive investments like emerging market stocks or small-cap companies. It's important not to let emotions cloud your judgment when assessing your risk tolerance. Avoid chasing high returns just because they seem appealing without considering the potential risks involved. Ultimately, finding the right balance between growth potential and acceptable levels of risk will help guide your investment decisions while keeping your financial goals on track. Decide what type of stocks you want to invest in. When it comes to choosing the right stocks to invest in, one important factor to consider is what type of stocks you want to invest in. There are different types of stocks available, and each has its own set of characteristics that can impact your investment strategy. One type of stock that investors often consider is blue-chip stocks. These are shares in well-established companies with a long track record of success. Blue-chip stocks tend to be less volatile than other types of equities and offer relatively stable returns over time. Growth stocks, on the other hand, represent companies that have high potential for growth but may not yet have established themselves as industry leaders. Investing in growth stocks can be more risky than investing in blue chips, but also offers higher potential rewards. Income-oriented investors prefer dividend-paying stocks which distribute part or all their profits among shareholders. Dividend-paying companies usually come from mature industries such as utilities or telecommunications, where there's a limited scope for expansion. Hence, they grant dividends regularly instead of reinvesting them into business operations. It's essential to do thorough research before deciding which types of stock best aligns with your investment goals and risk tolerance levels. Be sure to analyze market trends carefully. and consult with financial experts if needed so that you make informed decisions when building your portfolio. Consider your investment goals. When it comes to investing in stocks, it's important to consider your investment goals before making any decisions. Are you looking for long-term growth or are you hoping for quick returns? Do you want to invest in companies that align with your personal values and beliefs? Your investment goals will play a big role in determining what types of stocks you should invest in. For example, if you're focused on long-term growth, then blue-chip stocks may be a good option as they tend to be stable and consistent over time. On the other hand, if you're willing to take on more risk for potentially higher returns, then small-cap or emerging market stocks may be more suitable for your goals. It's also important to consider how much risk you're comfortable taking on. If the thought of losing money keeps you up at night, then conservative investments like bonds or mutual funds may be better suited for your needs. Ultimately, understanding your investment goals is crucial when deciding which stocks to invest in. By taking the time to determine what matters most to you and what risks are acceptable, you can make informed decisions that align with both your financial objectives and personal values. Use a stock screener. One useful tool for choosing the right stocks to invest in is a stock screener. A stock screener allows you to filter stocks based on specific criteria, such as market capitalization, earnings growth, or dividend yield. The first step in using a stock screener is to determine what factors are important to you when selecting stocks. For example, if you are looking for high-growth companies, you may want to screen for stocks with high revenue and earnings growth rates. Once you have identified your criteria, input them into the stock screening tool and it will generate a list of potential investments that meet those requirements. From there, you can dive deeper into each individual company's financials and performance metrics before deciding whether or not to invest. It's important to note that while a stock screener can be helpful in identifying potential investments, it should not be relied upon solely when making investment decisions. It's also essential to conduct thorough research on each individual company before investing any money. Utilizing a stock screener can save time and assist investors in narrowing down their options when choosing which stocks to invest in. Create a diversified portfolio. Creating a diversified portfolio is an important aspect of investing in stocks. A diversified portfolio helps to mitigate risks and maximize returns on investment. To create a diversified portfolio, you need to invest in different types of stocks from various industries. Investing all your money in one particular stock or industry can be risky, as the entire market could fluctuate and cause losses. By diversifying your investments, you can spread out these risks across multiple companies and sectors. One way to diversify your portfolio is by investing in large-cap, mid-cap, and small-cap companies that operate in different sectors, such as technology, healthcare, or finance. This approach will help ensure that even if one sector performs poorly, the other sections may still make gains. Another way to diversify your investments is by considering international markets. Investing globally provides exposure to different economies with varying levels of risk and return potential. In summary, creating a diverse mix of stocks across various industries and regions is key when building an investment portfolio for long-term success. Conclusion. In investing, there is no one-size-fits-all approach when it comes to choosing the right stocks. Each individual's investment goals, risk tolerance, and preferences are unique. However, by doing thorough research, considering your risk tolerance and investment goals, using a stock screener to narrow down options, and creating a diversified portfolio of different types of stocks in various industries can help increase your chances of success. Remember that investing always involves some level of risk. It's important to continually monitor your investments and adjust your portfolio accordingly to meet changing market conditions or personal circumstances. By following these steps and staying patient with your investments over time, you'll be on track towards building a strong portfolio that aligns with your financial goals for the future.